Hello, good evening.
Good evening, everyone. My microphone is audible now, right?
Yes, sounds sharp.
Okay, so we'll watch the recording. Okay, so everyone, welcome to the final section of the SMC mentorship. I just want to say, I don't know. Maybe along the way we would see the results of every other person, but the ones I've seen so far, I can say you guys have been doing really, really well. You know, you have been doing really, really well, and we appreciate your participation for mostly for the guys who have always been online. And congratulations to every other person who has learned something from this section. We have just today, and we will be done with SMC, but that doesn't mean we will be done with the entire sections. Like I told you guys, maybe second week of November or maybe third week of November, but within November we would start studying how to use YCOP on SMC. While within the first week of November, I would want to see, the participation of the guys in the group and also see how far you guys are going with the knowledge of the SMC. All right. So with that, then I will show you guys how I use YCOP, to match my SMC and how I use them for confluence. Okay. And then we would have that training probably till mid-November, mid-December. Okay. So on today's section, we will be going mainly over to the lower time frame, so I could show you guys how to understand order flow. All right, so we will go down to the 5 minute time frame. Let's study this wise action from this point. But does anyone have any question based on the past section you would like us to go into? Okay, I think we can go below that. Let's study something from around this area. So let's start from here. Okay. All right. So anyone have any question in particular you'd like us to go into before we continue? If I take 3 consecutive losses, no win, I'm done. Now I won't trade again. I will just leave it. But then, if I still have a particular kill zone, like let's say at this particular time, at this particular time of the market mostly mitigates some points, which moves the market to say 5 p.m. So at that particular point is like my last period, which I take my last trade. So sometimes I do trade 4 times in a row. And then if I lose those 4, I don't think I would take any other trade outside those 4. But when you talk about placing the trades, I do take patterns sometimes. So if my call log can be a little bit messy, but if you observe them, you will see that is either I was taking patterns from the trades, but overall, I only look at maximum of one setup at a time, and then probably the counter position of that particular setup. Let me say maximum of 4 trades in a day. So let's say we were in London section. Okay, so let me put on my section. Most of the time I do put on the section so I understand where the Asian section is coming from. So when I'm trading, this is how my setup look like. All right, but when most of the time these stuffs are not on, I just lose them to see what I want to see and then I close them. But when I'm trying to send my chart, I take out this and this, but most of the time I use this. But let's say this was a day, an entrance of the new day, right? So this guy helps me to see the Asian section. All right, so Asian section was formed right here. Right, on the previous day, what do we see? We see we had a break of structure here. Right, so this is kill zone, New York close. All right, so let me take that out. At this particular point, all right, so let's say I was planning to take a trade to take out this low. All right, so we had a break of structure from this point, change of character, happening to have the demand and supply, premium and discount stuff. I see we have this zone to watch, right? So we have this zone. The price actually did not mitigate that zone on that day, but then we had a retracement back up into this particular point, which then broke structure here. Okay, so we have this inducement, and then this POI becomes a point of observation, right? So let me put down the kill zone again. So you see this is an intersection between the London and then the New York. This particular point. This is 11 p.m. my time. This is when I'm coming online to look for a setup. All right. So at this particular point, this is where I get my first entry. Because you see, this is 11 p.m. I always come online. Martins did ask me yesterday, when do I trade? I told him 11 to 12, I'm already online looking for something to trade. So if I was planning to trade, let's say Euro GBP for that day, this would have been where, I would take my targets. And then London, New York opening, which is the next kill zone, is a point of observation. And as you can see, this mitigated the 50% of this FU candle, right? I told you guys this yesterday's section, and then went back up. So you see that now, did feel a fair value gap, but I don't think I would have been trading that because I don't really observe fair value gaps that much. But I think I would have been in the buy from here, and then maybe stopped out along the way from here. But then what happens? My second trades are always within New York kill zone. All right, so my third trades are always when New York close. That's around 5 p.m., which is this 5 to 6 p.m. my time. So my first trade is always around 11 to 12 p.m. Second is around 1 to 2, which is right here. You see that 13? Let me zoom in so you see that properly. So you see 13, that's 1:30 p.m. till 2:45. So this is mostly around 4, you see? 4 to 5 p.m. You see you get another entry from here. And then you're done for the day. So you see, basically I take maximum of four trades in a day because I mostly don't get that much. I don't pay attention to anything outside what I want to do for that day. So just 4 trades and based on what I'm looking at, all right, and based on how I trade. So 4 entry points in a day. Sometimes I do get stopped out, but definitely I'll get something like a reaction from my POI. See, so those are kill zones. These are really, really volatile periods. Price definitely reacts on something. So 4 trades maximum in a day, and these are my reason why I do take just 4. So that answers your question, right? So back to this which we were discussing about. I don't know if it is okay.
Yeah, it's okay now.
It's okay now.
Okay. So now let's go back to let's go back to today's study. So now I'm going to be showing you guys how I do.
Can I see your the indicator for this your your indicators for the Q zone and the time limits to set?
There's no time limit. Just the indicator does everything itself. My time zone is, as you can see, this is my time zone. This is the indicators, the only 2 indicators I have here. Just these 2. This one is for my Asian section, and this is for my Q zone. Just those 2, and then this is my time zone. Anything else? Okay, so zooming out. All right, so I'm going to show you guys how to do intraday trading, all right, using the lower time frame direction and how to know counter POIs from your particular point of interest, all right? So now we see this structure. I'm not using the higher time frame because I believe you all know how to operate the higher time frames now, right? So we have this. Okay, so if you can't hear me, just pardon with me, all right? The recording is going to be clean. You would understand that more, okay? So we have this breakout structure here. Let me go over it again. So I'm going to be showing you guys how I do intraday trading, how I get my setup within the day, and what time frames I use to observe intraday trading. All right, so pay attention to this. This is like the last mentorship for SMC. So please do pay attention. Okay, so now coming from, let's say, the 4-hour time frame. Although overall I do say go from the higher time frame, which is like the daily minimum for higher time frame direction. But let's, this is, we're using playback, so we know where price already went. So no need to go to the higher time frame. Then let's say we had a breakout structure from here. All right, so we're expecting price to return into premium of this particular range or mitigate something. And now, remember what I told you guys about swing highs. Once there's a breakup structure, the internal structure swing highs becomes liquidity. So this would be a target. You could see the beautiful reaction after price cleared at that swing high. And then we also know we would have another one, which would be within the swing high. But this did clear liquidity, but then it's going to be used as an inducement for probably this guy. Okay, so this our 2 observation zone, clearing out this liquidity, and then this one as well. So now I go to the lower time frame. Let's say the 1 hour first. To observe within this structure if there's anything that I could expect a mitigation from. Right? If there's anything at all, I could expect a mitigation from. And then what I see here would be that we have multiple daily highs, as you can see, forming liquidity. You see, this was a daily high, high of the day, high of the next day as well. So these are multiple daily highs forming liquidity. Our previous daily highs are swing highs as well. And then you're currently saying that this is a single swing high on the higher time frame within a range, which price is returning into to clear out a swing high. So this is clearly liquidity. All right. So we do have a hidden base within this week, right here. Observation as well. Okay, so but then price hasn't gotten to that point yet. One thing you should know is that always pay attention to the current liquidity and current structure of the order flow, because you would actually need that to know when price invalidates your zone or where you should get a re-entry from. Okay, so looking at this right now, when the price cleared out this liquidity, right? So we have an FU candle right here. This guy. So you can see clear that the liquidity did the manipulation and then broke structure. And then we have a break of swing high right here, like a break of structure, right? So, and then on the 30-minute time frame, I use the 30-minute time frame as well. Okay. I observe what's happening within this structure. Okay, so within this range becomes my POI, my area of focus for now. Overall, we're bullish to clear out these guys, right? We want to take out the old highs which were created here. You could call that buy side liquidity, whichever you want to call it, okay? And then we'll also see a POI right here as well. You see this week, yeah, these guys are also induced in that week. This is the swing high, just right below that week. So this guy did mitigate this, but you can have this full as your area of interest, where you want to see a reaction from price from. But definitely this week might just get mitigated and price moves back. So do highlight the week as well. So we have this old highs as overall target, and then we have this range right now. So within discounts on the 30-minute time frame, I used to observe the range, the lower time frame range, which we have right now. This would be my range. And then if you want to draw your range, mainly I recommend the 30-minute time frame because it helps you to see which lower time frame structure is being formed. As you can see, you see the manipulation and then the break of structure. So now I go down to the 5-minute time frame because on the 5-minute time frame here, I want to see what's happening within the order flow. Okay, before I go down to the 1 minute for entries. But my 5 minutes is to observe the order flow happening within my range. Now, where is that price action? Okay. All right, so within these guys, after the break of structure, we had this low, right? So I told you guys about the structure stuff. This guy did this, then this, then this, and then this. So we have this, right? So we had a little accumulation playing out here, or more like a distribution because, by climax, AR, ST, UT, and then the UTAD, test, last point of supply, and then, sign of weakness. And then it came back down here. Then if you're observing this zone right now, what would I do? Let me explain something to you guys. Okay, so now observing this particular zone, what do you see? Before I highlight anything, can anybody tell me if you were to pick a POI from this range, forget this you see right now. Let's say if you wanted to pick a POI from here, having this, you understand that this low is a significant low, right? And then you also have this low. What will be the next thing you would do? This is the 5-minute time frame. Right, so this is the lower time frame. Right, so what would be the next thing you do? Let's say this guy hasn't happened yet. This is no premium, so I can't actually put it on replay mode. But I believe you all won't just use based on this reaction. But if you were to pick this POI, if you were to pick a POI within this range, what would you do? Having this refined to this, and then you could also refine down to this. Okay, but overall, this is like the institutional candle where the manipulation started from. So at this point is what we want to observe from. So if we had returned to the lower time frame, this would have been an entry. Okay, so at this particular candle did a mitigation of the institutional order flow. And then we also have this guy observation as well. Okay, observing this week will be something I will do as well. All right, so we have this swing low. I told you guys once structure is broken, the swing lows within it becomes liquidity. All right, like expect a stop hunt of those lows. You see, and now is being used to create a relative equal low. And then you see something from here. This low did not actually break structure officially, just this particular range, which was from right here. See something like this. Oh yeah, that did go above this, but I prefer calling this a stop hunt. And then this would be our POI. Because if you reverse this, say a break of structure here, liquidity, POI. Now, if you were trading from here, your first target would either be to clear out these guys, because these are engineered liquidity as well, or to clear out this. Okay, so if I was doing this, once we clear out these lows, I'll break even or take something out, or even close the trade because this is like a counter POI. All right, so with this, could actually be in a sell from here. If you're asking on the 5-minute time frame, do I wait for reaction for my POI? Depending on how big that POI actually is. Okay, depending on how big that POI actually is. If this is like this is a 7 pips, a 4 pips POI, there's no need for me to wait for a reaction from this anymore. I will take a trade from here, with my limits, because this is like a 4 pips. All right. So now we have a 4 pips POI. I don't think there's any need for you to go down to the 1 minute again to wait for a reaction and then break the structure again, because this is literally just 4 pips. And then my first target would be the liquidity being generated right here, because this is like a stopward, but though you still see that this is a swing low, and then this structure has been broken. So within this particular range coming from here to here, the liquidity being generated within it would be these guys. You understanding me now, right? So now this becomes a low probability trade because these are relative equal lows. Okay, but as you can see within these structures, this would be liquidity. So this FU candle, this is an FU candle. You know that, right? Because this, you guys following me up, right? You guys are following me up.
Yeah, sure.
Yeah,
Okay,
sure.
so you see this. Clear that liquidity, right? And then this low is holding right now. Although it did not clear any liquidity, but then it's holding right now. And you see the change of character from this point. You see liquidity being generated right now, but they are still relatively equal lows. But liquidity is being generated. The least what you could do for me, what I would do is this. Now, this is a new day. This is a new day forming right now. This is Asian section. And I don't think any of us would be trading at this particular point because this is like 12 p.m. my time. The new day is being formed. So I don't think I'll be taking a trade from this point. But then if we're online, and as you can see, this other trade did fall in close to, oh, this was a little bit past my trading time. So I won't say I will trading from this. But if I had a limit from here, like last week Friday, my POI was mitigated around 9 p.m. But if I had a limit from here, I think this would have still mitigated my point. But then we have the next day. You see this is Asian section being formed right now. Now this guy mitigated this point, right? And then broke structure here. Now you have a new swing structure, which has been formed. But don't forget, you still have the relative equal lows right here. These are liquidity. Okay, so these are liquidity. So if you get an FU candle from this point, don't be surprised. Still pay attention and then wait for something like this. Okay. So now we have generated liquidity, 3 touches. This is like a resistance zone right now. You get that now, right? You see multiple touches at that particular point. You see it now like a resistance zone. It's too obvious. Okay, so a stop hunt from this won't be a surprise to me at all. But then we still have a break of structure. So we're still going to observe this zone to see if we get something to trade. And now we are entering the next day. Let me mark out this structure. Sorry about that. Okay, so this is now the internal structure. We're following order flow right now, right? This is order flow. Remember, this is a weak high right here. Let me take out the indicator. This is a weak high Can anyone tell me why I'm calling this high a weak high? This particular high. Can anyone tell me why I'm calling this a weak high?
Because we are bullish and the structure is breaking higher, you know.
Yep. Failed to break structure. Yeah, OC, you're correct. And you're both correct. You're both correct. That's true. As you can see, it failed to break any swing low. No swing low was broken. All right. And as you can see, within this order flow, within the order flow of this range, which was formed right here, we're currently acting bullish. So there's every probability that this guy is going to get cleared out. So this becomes an external high, right? And also a target, because we know from our observation, our overall target is kind of like still higher, you know, right here. Sorry, around here, but we can't go back further. So now back to this point. Now you see your Asian section is being formed. Okay, you have an entry candle here, which is this. Can anyone also tell me why I'm calling this an entry candle? Just to make sure you're following, just to be sure you're following. I just want to know if you guys are still with me. Do anybody know why I'm calling that an entry candle?
Which candle?
This candle I just marked there, this one.
Yes, because you can see the liquidity there. It cleared the liquidity, then break the structure.
Exactly.
This liquidity below there.
Perfect. It cleared out this liquidity within this range, and then we broke structure.
Yeah.
And this is like the candle with at the extreme point. So if this guy gets broken, then you know it was either another FU, but you only call that an FU once it closes above the liquidity. And as you can see right here, this guy did a stop hunt, and then we had a rejection, right? We cleared out all this liquidity that was formed here, and then we had the rejection. Okay. So now going back to this, you see the Asian section being formed above it. Remember, the Asian section is also going to be acting as an inducement. Remember the study we had on Asian. Sorry, excuse me. The study we had on Asian sections. Remember what I said? 50% of this will be my observation, and you can see our reaction. So if I was to place my entry, it would have been right here. Maybe from this point here, but no reaction. So all the same. Asian section is going to be inducing our POI, but then it will still be inducing something above. We have this external high liquidity, right? So this guy would be our entry point for the day. Targets external high. You see, easy. Now, if we're doing this using kill zone, let's see if it's around when we're trading. You say this is now happening at London kill zone. This is London kill zone, London opening, and then price goes back up. Now, what do we see from here? We have a break of structure again, or we can say a change of character, because officially this high hasn't been cleared out yet. All right. So this is like a change of character. We have the induced imbalance right here, and then stacked up highs within this. So this is like another re-entry. If you ask me, this is like a re-entry. And then if you do something like this, remember what I told you about the midpoint of the Asian section? If you guys remember that, I told you there are three important parts of the Asian section. We have the high, the low, and the midpoint. Is someone asking a question? Okay. So we have the high, the low, and the midpoint. So now we know this is kind of like the ICT Judah swing, because you can see, you know, Asia section, I think it's something like this, you know, price goes fake people into the one direction and then ends up going higher, right? So now seeing this, we know this is clearly a mitigation, and then we have the break of structure. There's every possibility that the whole day will be going bullish, right? Because using this understanding, we know this is like a Judah swing into our POI, and we have that reaction which we're looking for. From this point, I would break even and take patterns off from this point. All right, so we have this demand zone right here. Remember, we still have liquidity resting below this. So if we do get a stop hunt from here, so best you can do is to break even. Okay, so this is like an entry two. This is another entry from this point here, and then price went back higher. Let's see. After price cleared at our external high within the range, though, because on the higher time frame, daily structure, we have on the 4 hour, 1 hour structure, sorry, we have this guy. So as our overall target, this highs, right? So now we observe what structure has just done. We have this as the new low, and then above this as the new high, right? So what do we expect? We expect price to return into this guy and then give us an entry. So now let's go back to the 30 seconds time frame, 30-minute time frame, sorry, to see what structures has been formed and how we could make use of them. So let me come back here. Okay, so which POIs do we see forming in here? Obviously, let me go lower so we don't get to see all this because I want to ask some questions too. Let me go to the 5-minute time frame. What is this? I don't want to.
Cancel
Wait.
top right. Yeah.
Okay.
Yeah.
Thank you. Time frame is this? Where are we? Daily. I said 5 minutes. Okay. All right. So this becomes our range. Now we're still bullish. There's no official break of structure yet. As you can see, whereas the order flow is still bullish. After we cleared out our TP, we came back down, bullish. Went back up again, both structure. So if you were still trading within this, it's fine. But now you know you're in discount area and the liquidity has been cleared out. If you want to take a trade, if I was to take a counter trade from there, I would return back to this point and then mark out the swing highs of this range right here. These guys. So at every point, we will get an FU of these highs, because traders are trying to take trades from within these points, below each of these highs. Below and above them are liquidity, the breakout traders. And also we have the traders who set their limits just below them. Now we know this is internal range liquidity, right? Because we know our overall target. So we know all these guys will be used for little reaction, maybe 20 to 30 pips each, or as counterpoints. So here. So you see, first one was here, second one was here, the third one was here. So you see that now, right? We don't expect these guys to break structure because we know that their liquidity, right? So the one at the extreme was this one, which took control, which controlled price back down. And then there's a real logic explanation for that because of this break of structure here. But we're not expecting it to swing price back down, just something within to return back into premium, because we know that we're expecting price to return into premium of this range, right? So this guy, these are all counter POIs, as you can see, but if he fails to break structure, it's liquidity. You see, this guy failed to break structure, went back up. This also failed to break structure, went back up. And this guy returned and broke structure from here. So now if I was to trade from here, just give me minutes. Hold on, 1 sec, please. Okay, back to this. So you see this guy broke structure, right? And then return into discount of this way. Now let me see how I could delete this. Now, this particular section ends in 3 minutes. This particular Zoom. Okay, but after this, I would go over the next part of this is going to be a diagram section. I'm going to be using diagrams to explain. But on this one, I'm using price action, so we'll understand more. All right. So if I was to pick a POI within this range, you see this guy right here. I would pick this guy first. Then can anyone tell me why I'm picking this guy? Why I pick this candle?
Because it broke structure upwards and it has an adjustment above it.
True. Yes, it broke structure right here. It was a candle which broke structure within the range. And we see the inducement right here. And then we also see it cleared that liquidity mitigating this zone. All right. So if I said I wanted to pick this guy as well, why would I pick this? Anyone can explain why we would be picking this?
Because
I think because of the liquidities below them.
we took out for that low before it broke upwards.
Yes, OC2 is correct. You're all correct. This gives me great joy because it shows that you all are following with the whole study. And knowing that this is the last on SMC for now, teaching, but that doesn't mean that we're not going to be having sections on SMC. If you're confused on anything, don't because the mentorship is over, you can't ask your questions. We're having sections every weekend, all right? So ask any question when you get confused on anything, but just understand that you understand how price action works when it comes to SMC. You know what smart money concept is. With this understanding, you actually know what smart money concept is outside knowing just what other blocks and breakup blocks, but you know how it works. Okay. Now you have seen that this guy came close to this POI but failed to mitigate this. Now I taught you guys also about the minor POIs and the major POIs, right? The high probability POIs. This guy is a high probability because he has the inducement already. But this is not because nothing has been formed yet. But then we see this happening right here, which did not break any structure. And then this reaction that came from it never really mitigated the POI. Okay, so if you come close, I told you guys, if you come close to the POI, but doesn't mitigate it, is a liquidity. And we see it never actually did break the swing high, right? And they did not really break this one as well. So you see, which means this is confirmed to be a liquidity, and an FU candle of this is, inevitable. And now right now we had the FU, which broke structure. So you see, this particular point becomes an observation point. Now, I told you guys about using 50%, right? So you don't miss out on anything at all. So the 50%, we have this. Now, this acting here would be like an inducement for it. And then now in the next day formed, although this day, let me say there was no clean trades on this particular pair, all right? So there was no clean trades. This guy did not give a retracement. And obviously, I won't be taking we have less than 1 minute. This is about to end. Okay, but if we do end, tap the same link. I repeat, hopefully my voice is not cracking. Just tap the same link and you will get back to this point, okay? Just